What's going on, everybody? Liam O'Reilly, Vermont Economic Realtor with Jerry Riley Real Estate. I hope you're doing well. We need to talk about foreclosures today. There's this great article that I got from Todd Sachs. He's the one who turned me on to it with Sachs Realty. I was just on a podcast on their channel. I'll leave the link to that podcast in the description for you folks. But essentially, more and more homeowners are requesting homeowner assistance to help pay for their mortgage. So we're going to dive deep into that. We're going to take a look at foreclosures, and most importantly, do these numbers mean that home prices are falling? And if you're a seller, you should get out now before home prices crash. And if you're a buyer, should you wait until home prices crash? I'm going to answer those questions now. Let's get right into the data. So if we take a look at the article, again, thank you, Todd, for turning me onto this and mentioning it in the podcast. New Treasury Department data shows Homeowner Assistance Fund help more than 300,000 families, help keep more than 300,000 families in their home. So basically what this is saying is that the government is essentially bailing out and helping pay for people's mortgages who can't afford to pay for them. You know, if you watch some of my other videos, you know that M2 money supply has gone down. We're seeing an increase in overall debt and credit card debt. A lot of Americans have less money and they're struggling to pay their bills. And, 300,000 people were kept in their homes because the government helped pay their mortgage. But let's dig a little bit deeper into this data. So if we go over to the actual chart, and basically I'm just switched over there, but how you get to this chart is all the way down at the bottom. They have a link right here, Homeowner Assistance Fund quarterly data. If you click on that, it takes you to this chart here, and we can dig into the numbers. So I think the biggest number to look at here, obviously you have the data where the 300,000 people are, let's see here, total applications withdrawn, applications approved right here. 317,000 applications improved on their grand total. If you look at that middle list, kind of in the middle of your screen there. So that's the headline number that they're talking about. But some of the bigger numbers here are the percentage increase year over year. So, or not year over year, quarter over quarter. So things are really picking up fast, and more people are applying for this homeowner assistance, which again is not a good sign for the economy, right? And we've talked about this in other videos with consumers really struggling. So if we look at the total applications here, the left column in the middle section that I'm highlighting, the total applications is at 815, or excuse me, grand total 841,000. I'm kind of dragging the number around there. 841,000 applications, up 16% from Q4. So this is Q1 of 2023. It's up 16% from Q4, which is pretty significant. I mean, if it keeps increasing at that rate, obviously, not a good sign for the overall economy. Applications improved 26%. So basically, the government's helping out more people than they used to and spending more money on this quarterly data. So I think something, basically what we need to take away from this is more people are struggling with their mortgage payments. It's harder for the average American consumer to pay their mortgage. And the question that we need to answer is, how is this going to affect housing prices? And I think to help answer that question, we should look at the historical foreclosure data to see where we're at with foreclosures now, where we've been at for the first half of 2023, because we do have that data available to us. And what we saw back in 2008, in 2009, in the Great Financial Crisis, how do these numbers compare to where things were at then? So let's take a look at that right now. If we go back over to our browser here. So this is Atom data, and I'm kind of cutting off the top of the headline there, but this is foreclosure activity in the first half of 2023 ticks upward towards pre-COVID levels. We have the chart there. It's the same chart, but I just prefer this one a little bit lower. So if we look at where we're at, what this graph is showing right now are foreclosure filings right here. January to June, foreclosure activity, properties with foreclosure filings. So properties that have foreclosure filings on them, right? The bank, they've stopped making their mortgage payments. The bank has filed to foreclose on the property. The number that we're seeing here, the chart that we're looking at now, are those properties. So we see where we're at now. We're at 185,000 in the first month, or the first 6 months of 2023, compared to over a million in 2008, 1.3 million in 2008, 1.5 million in 2009. and 1.6 million in 2010. So basically where we're at now is we're still below 2019 levels of foreclosure filings. But at the same time, let's not forget that we still have over, right around 840,000 Americans who are applying for homeowners assistance and are struggling with their mortgage payments. So even though we're at such a low number of foreclosure filings, and we have, 180,000 foreclosures, but we have 800,000 people kind of in the queue asking for homeowners assistance who, maybe some of these people were filed or have been foreclosed on now. That's something that, this video isn't going to go into too much because, right, that the data that we looked at the beginning of the people getting homeowners assistance, that was from Q1 of 2023. This is for the first 6 months of 2023. So potentially some of the people that applied for homeowners assistance have now have filed for foreclosure or have had foreclosure filed against them. So those numbers might overlap, but still, we are looking at potentially another, 500 to 800,000 homeowners which would make this number shoot straight up to about a million foreclosures across the United States. So will we see that happen, and will we see homeowners, start to get foreclosed on and need to bring their properties to the market, which will bring a glut of inventory and cause home prices to go down? Now, the thing that I will say against this argument, or I guess the first caveat I'll say is, look, there's no national housing market. So some of these states are going to differ drastically, and these markets are going to differ drastically from one another, right? Where I'm at in Vermont, where I'm an expert at, we do not have the same foreclosure issue. We haven't seen a drastic increase in foreclosures like states like Illinois have or Maryland has, as they outline in this video. So if we take a look at, we scroll down here and we take a look at the chart. Let's see here. Oh, I'm in the wrong article there. So if we take a look at the chart, so this is for January to June 2023. They rate the state by number one has the most foreclosures. So if we look for number one, that's Illinois with 13,000 foreclosures in the state. If we go down to Vermont here, see, Vermont is the 49th ranked state with 71 foreclosures. You can see it's just behind South Dakota here. So, why are there so many less foreclosures in Vermont compared to Illinois? I would argue, at least, I'm not an expert at the Illinois housing market by any means, but I know why there's not that many foreclosures here in Vermont, and that's because if somebody wants to sell their home and they're going to get foreclosed on, why are they going to just give it up to the bank when most likely they've, appreciated, their home value has appreciated, they have some equity built up in their home, and they could list it on the market and, sell it, get rid of it. They don't have to worry about the foreclosure. They might even make a little bit of money and have some money in their pocket. So that's why there's only 71 foreclosures in the entire state of Vermont. And I think, there's still a lot of markets in the country that are very hot, that are still experiencing competitive market conditions, and people who are stressed financially, people who potentially would get foreclosed on, can sell their property to somebody who can take good care of it and can get rid of this home before it hits the market. So, or before somebody forecloses on them. So I think that's one thing to keep in mind, is that inventory is still so low compared to where we are at historically. Remember, building up to the 2008 crash, we were building like crazy, and we haven't really been building over this past decade. So in general, there's less inventory, which means if somebody wants to sell, it's easier to sell now than I think it was leading up to the 2008 crash. Something else I wanted to point out is if we're going to see, if this foreclosure rate is really going to affect the overall housing market, then I expect there to be a buildup just like there was in 2008, right? We're not just going to jump up to 2 million to 3 million foreclosure filings per year like we saw in the Great Financial Crisis overnight. We're not going to go from 2022 300,000 foreclosure filings all the way up to 3 million in 2023, or even 3 million in 2024. I think what we could see is a projection like we saw here, right? If we have, we had 300,000 last year. In 2005, there was about 500,000 foreclosures, and I think we're at the rate of foreclosures that we're going at now. If things start to continue to pick up in the latter half of 2023, we could see around 500,000 foreclosures here in 2023. And then, if this trend continues and things start to build up like they did in 2006, they saw 700,000 and then 1.2 million in 2007. I think if we start to see things ramp up, really, it's going to take a couple years to get to the number of foreclosure filings like we saw during the great financial crisis. So if we're going to see the same thing unfold, it's going to be probably in 2026, 2027, 2028. That's when we could see this foreclosure, this increase in the rate of foreclosures and the potential number of foreclosures coming to the market. That's when we're going to see that impact the general economy. Now, the last point I wanted to make with this video is that that is, 2026, 2027, 2028. Those are 3, 4, 5 years down the road. That's a little ways away. Personally, when I look at the economic data and you see what's happening to consumers right now, when you take a look at the overall economy in general, I think that we are much closer to a recession, and the Fed is much closer to pivoting, lowering interest rates, making things more affordable in the housing market, bringing more supply to the market for buyers who aren't no longer affected by the lock-in effect. I think we're much closer to entering into some sort of recession, rates shifting, bailouts potentially happening, which would help ease the blow of foreclosures that could flow to the market in the next 3, 4, 5 years, resulting in a crash like we saw in 2008. I guess that's another thing to consider as well. Is when do you think this recession is going to hit? Do you think it's going to hit if we are going into a recession, which I think it is likely that we're going to go into a recession, but if it's going to hit in 2024 or 2025, then is it going to have the same effect on home prices that it did in 2008 and 2007? That's something that you have to look at this data and make that decision for yourself. Personally, especially here in Vermont with only 71 foreclosures, I don't think there's a lot of, I don't think foreclosures are going to cause housing prices to come down drastically here in Vermont. Now, in your market, maybe in Illinois or one of these markets that have a significant number of foreclosures, this could be a big factor for you. So it is something to watch. Anyway, Liam O'Reilly, Vermont Economic Realtor. Leave a comment. I love hearing from you folks. Do you think I'm right? Do you think I'm wrong? Leave a comment in the description. Other than that, all my contact information is in the description. So any of your real estate needs, I would be happy to help you with, regardless if you're here or in another state, here as in Vermont. Reach out to me. I'd be happy to answer your questions, help you buy or sell your next property. Other than that, I'll see you guys in the next video.